Howdy friend, in today's video I'm going to show you the 3 best types of signal confirmation that will definitely lower the number of unreasonable trades you take. Okay, let's start off by talking about an important topic. On this chart, we can see quite a few long entry signals produced by the RSI. If you would have traded all of those, you would have lost a ton of money, because the market has been in a strong bearish trend. To avoid trading those bad signals, no matter if they are caused by an indicator or price action, we need to use some confirmation rules. If you don't use them, you often end up trying to catch a falling knife, which will result in many losses before you finally take a good trade. But waiting for confirmation creates a conflict most traders have already experienced. If you don't wait for confirmation, you get an earlier entry as well as a better risk-reward ratio. On the other hand, the probability of making money is therefore usually lower. If you wait for signal confirmation, you get a later entry with a worse risk-reward ratio, but therefore a better probability of trading a good signal. The following 3 types of signal confirmation focus on giving you confirmation without delaying your entry too much. The first signal confirmation is the price actually breaking the high or low of a significant candle that is leading to your signal. In the following example, I'm using the moving average as the basis for our entry signal, but this could just as well be a different indicator or a price action pattern. Before we get the entry signal, the market usually moves against us. On the left-hand picture you see the market moving against us towards the moving average. We could just enter a long trade right away, but this often ends the way it did on the right-hand picture. The market just goes straight through the moving average. However, if you wait for the price to start turning and closing above the high of a previous bearish candle, or below the low of a previous bullish candle in case of a short trade, you get confirmation that the market reacts to the moving average without entering too late. Let's look at some more examples. As you can see, on this chart I'm using Bollinger Bands as an indicator. Right here we have a good example. The market is in a bearish trend and the pullback hit the upper band of the indicator. At the same time, the market creates a double top. But as mentioned before, the market usually moves against us before we get the entry signal. We can see some strong bullish bars forming the swing towards the band, and therefore to our entry signal. A good way to deal with this situation is to wait for the market to break below the low of one of the bullish candles before entering the short trade. In this example, it would probably be enough to wait for the market to close below the last strong bullish candle. Okay, let's talk about another way of getting confirmation. This one is quite simple, yet very useful, because it does not delay your entry. If you hope for a strong price move in your direction after entering the trade, you have to know that this also means traders and investors on a higher time frame have to trade in your direction. So if you can find reasons why other traders on a higher time frame would also trade in your direction, you greatly increase the chance that the market will actually go your way after entering the trade. The best example is someone entering a long trade without realizing that on a slightly higher time frame there is a strong bearish trend and the trader only trades the pullback of that trend. Let's look at some examples. So, here we can clearly see that the market has formed a triple top. If we wanted to go short on the third swing down, we could check a higher time frame for confirmation. Here we have the same signal on a slightly higher time frame. We can see how the market on this time frame hits the moving average, while also being in a strong bearish trend. Both factors increase the value of our signal. Okay, the last one is actually my favorite confirmation signal. As you know, markets move in trends and there are different trend sizes. To explain this tactic, let's look at the 2 pictures below. On the current time frame, there is a beautiful support area that you want to use to go long. However, the swing leading down to that support area is a bearish trend. If we go to a smaller time frame, we can clearly see the trend in form of lower lows and lower highs. A great way to get good confirmation without delaying your entry too much is by waiting for the trend that leads to your entry signal to be broken. Let me show you some examples. So, on this chart, we can see a good-looking support area. Let's say we want to take a long trade there. If we go on a smaller time frame, we can see that the swing leading down to the support area is in fact a bearish trend. You can clearly see the bearish swings down, followed by pullbacks. A good confirmation for your long signal would be the market breaking the high of the last pullback, and therefore, ending the bearish trend. Furthermore, while breaking the trend, the market created strong bullish candles, which makes your long signal even more significant. Okay, I hope you enjoyed this video and learned some new things. If you want to make the leap from beginner to professional trader, then make sure to subscribe. See you next time. Good luck on your journey. Bye.